When the term capital city comes to mind, you may think of towering skyscrapers, vibrant street life, and a constant buzz of excitement. However, what if we were to reveal that some capital cities defy this expectation, presenting themselves more like sleepy small towns, often feeling almost deserted? Today on Across the Globe, we're going to be looking at why nobody lives in these 10 empty capital cities. Before we get into it, for some perspective, more well-known cities like San Francisco, Las Vegas, and Boston have populations of 825,000, 690,000, and 715,000 respectively. Number 10, Springfield, Illinois. While Chicago is Illinois' largest city by population with nearly 2.7 million residents, its state capital, Springfield, feels far more like a quiet small-town retreat in comparison, with only about 112,000 people. This means that out of Illinois' population of nearly 12.7 million, less than 1% of Illinoisans have made the capital their home. So, why is this capital city so quiet? One key reason is its geographical positioning. While centrally located in Illinois, it's somewhat distant from major urban centers, sitting at just over 200 miles away from Chicago. This undoubtedly limits its appeal as a primary destination for jobs and economic opportunities. In January 2024, the median salary in Chicago was $65,250, while the average annual salary in Springfield was $64,296. Yet, Chicago is simply too far to commute if you live in Springfield, and the extra $1,000 would not cover that amount of mileage. Additionally, the city's huge stretches of underdeveloped land can create a perception of being less vibrant compared to larger cities. The economic landscape has evolved, with many industries and employment opportunities gravitating towards larger cities, further contributing to Springfield's population stagnation. The city also experiences out-migration trends as younger residents seek opportunities in more metropolitan areas, leading to an aging population. In 2017, a survey by the State Journal Register found that half of its participants younger than 35 had considered leaving Springfield. Number 9, Little Rock, Arkansas. Little Rock, Arkansas, with a population of just over 200,000, is larger than many state capitals, but its size doesn't shield it from significant challenges. Economic shifts, including the decline of traditional manufacturing jobs, have left certain neighborhoods grappling with poverty and disinvestment. In 2023, Arkansas lost 4,300 manufacturing jobs, with much of the impact felt in durable goods production. Little Rock's poverty rate stood at 16.4% higher than the national average, and the city's revitalization since the 2008 economic downturn has been slow compared to peer communities, according to Arkansas Money and Politics. With poverty often comes spikes in crime, and Little Rock ranks poorly in safety metrics. According to Neighborhood Scout, Little Rock is safer than only 1% of U.S. cities. Residents face a 1 in 55 chance of being a victim of violent crime, and a 1 in 19 chance of falling victim to property crime, rates significantly higher than state and national averages. These factors contribute to why some residents leave Little Rock for greener pastures, despite its rich history and potential for growth. Number 8, Jefferson City, Missouri. Jefferson City, the charming capital of Missouri, is home to just over 42,000 residents, making it one of the smallest state capitals in the U.S. While its population pales in comparison to the bustling metropolises of St. Louis and Kansas City, Jefferson City holds its own as the political heart of Missouri, housing the state government and various legislative bodies. Known for its picturesque charm, Jefferson City has been recognized as one of America's most beautiful small towns. The city benefits from a highly educated workforce and is home to successful companies, with the state of Missouri being the largest employer, providing jobs to over 14,000 residents. However, Jefferson City faces notable challenges. Its geographic isolation from interstates and major metropolitan hubs, coupled with a limited industrial base and slow labor force growth, has hindered its economic development. According to TIP Strategies, these factors contribute to its sluggish population growth, which stands at just 0.02% annually. For comparison, Kansas City is growing at a rate of 0.16% annually. Crime is also a concern in Jefferson City, with a 1 in 47 chance of being a victim of violent or property crime, making it less safe than many communities across the U.S. While the city offers a unique mix of history, charm, and administrative importance, these challenges make it less appealing to new residents compared to Missouri's larger cities. Number 7. Dover, Delaware. Dover, the capital of Delaware, sports an opulent history dating back to its founding in 1683, making it one of the oldest settlements in the region. Although it has a historical charm and serves as the state's political hub, Dover's population remains modest at just over 40,000, placing it among the smallest state capitals in the U.S. The city features notable attractions like the Old State House, Dover International Speedway, and the Firefly Music Festival, along with a major Air Force base. However, these assets haven't fully shielded Dover from economic challenges. In 2021, the closure of Wesley College dealt a blow to the city, reducing its population of college students and impacting local businesses. Economic revitalization remains a priority. According to reports, businesses have struggled to thrive due to low foot traffic, prompting the city to invest $25 million in redevelopment efforts. Still, the shadow of nearby bustling regions such as Baltimore, Maryland, and Philadelphia, Pennsylvania, looms large, offering residents more dynamic economies and opportunities. Dover also faces concerns with crime. According to Neighborhood Scout, it's safer than only 2% of U.S. cities, with residents having a 1 in 118 chance of experiencing violent crime and 1 in 21 chance of falling victim to property crime. These factors, coupled with slower growth, contribute to the city's quiet reputation, contrasting sharply with the vibrant energy of larger capitals. Number 6. Pierre, South Dakota. Welcome to Pierre, South Dakota, the state capital that's as easy to miss as a needle in a haystack. Nestled majestically along the banks of the Missouri River, this little gem is surrounded by the scenic beauty of the Badlands and the Black Hills, with larger neighbors like Rapid City and Sioux Falls just a hop, skip, and a jump away. But here's the thing. Drumroll, please. Pierre boasts a population of a mere 13,000 people. This means that out of the 919,000 people that live in South Dakota, only 1.4% of them have chosen to reside in Pierre. So, why is this? Well, much of Pierre is an open landscape. The city is surrounded by open spaces, including the Missouri River, Lake Oahe, and the Fort Pierre National Grasslands. While the city's location in the middle of the state and on the river make it a popular destination for outdoor activities, it doesn't leave much in terms of work opportunities or education. The school district only comprises 3 elementary schools, 1 middle school, and 1 high school. Additionally, for a city of such small size, crime is prevalent here, which can deter people from moving here or cause others to leave. According to Neighborhood Scout, the chance of becoming a victim of either violent or property crime in Pierre is 1 in 44. Number 5. Helena, Montana. Nestled in the heart of Montana, Helena is a city with a rich history, dating back to its founding during the gold rush of the 1860s, when prospectors flocked to the area in search of fortune. Today, Helena remains the state's capital, blending its historical charm with the rugged beauty of the surrounding Rocky Mountains and Missouri River. With a modest population of just over 35,000, Helena is one of the smaller state capitals in the U.S., and its quiet atmosphere contrasts sharply with the more bustling energy of Montana's largest city, Billings, which has over 120,000 residents in its metropolitan area. So, why do so few people live here in a state with over 1 million residents? One factor may be the harsh winters. January temperatures in Helena can average between -10 and 1 degree Celsius, and snowfall can linger from October to April, making it less appealing for those who prefer milder climates. The coldest month here is December, with an average low of -9 and a high of 0 degrees Celsius. Helena's geographical isolation also poses challenges. Flights to the city can be expensive compared to larger destinations, and the cost of transporting goods often results in higher prices for certain necessities. This remoteness can make living in Helena feel less convenient compared to larger cities with greater access to services and amenities. Lastly, crime rates in Helena are surprisingly high for a city of its size. According to Neighborhood Scout, Helena is safer than just 5% of U.S. cities, with a 1 in 25 chance of being a victim of violent or property crime. Within Montana, over 95% of other communities have lower crime rates, which may deter potential residents. Despite these challenges, Helena retains its charm as a capital city with a rich history and access to stunning outdoor recreation, making it a unique destination for those seeking a quieter way of life. Number 4. Frankfort, Kentucky. Snuggled in the heart of Kentucky, Frankfort may be the capital, but with fewer than 30,000 residents, it's more of a cozy neighborhood gathering than a bustling metropolis. While bigger cities like Louisville and Lexington show off their flashy attractions and vibrant nightlife, Frankfurt is sadly declining at a rate of negative 0.39% annually. So what's going wrong? With its quaint downtown streets lined with charming shops and historic landmarks, Frankfurt may seem idyllic at first glance, but beneath the surface, a whisper of concern echoes. The suburban sprawl that stretches beyond the city's core creates a peaceful living environment, but it also fosters a significant gap in economic opportunities. While larger cities bustle with industries and attractions, Frankfurt finds itself struggling to keep pace, leading to a stagnation that leaves many residents feeling stuck. Frankfurt's unemployment rate was at 4.3% by the end of 2024, compared to 3.5% in 2023. With limited job prospects and resources dwindling, it's no surprise that the poverty rate in this small capital has climbed to a troubling 17.43% as of 2024. Number 3, Harrisburg, Pennsylvania. Welcome to Harrisburg, Pennsylvania, the capital city that's got its own crown, but only about 50,000 residents to wear it. Once upon a time, this charming little hub was a booming industrial powerhouse, filled to the brim with bustling factories and a population that soared. But like the forgotten sandwich at the back of the fridge, Harrisburg has seen better days. Much of the city's troubles can be traced back to 2011, when significant financial strains led to it declaring bankruptcy, largely due to obligations associated with a failed incinerator project that burdened it with substantial debt. Additionally, a shrinking population has led to decreased tax revenues, limiting the city's financial resources to maintain essential services. Back in 2013, in a bold move to breathe life into its struggling economy, the city decided to outsource its parking meters to SP+, a savvy strategy intended to create a reliable revenue stream to help ease its financial burdens. However, this would-be hero turned out to be more of a sidekick, as the anticipated influx of funds never quite materialized. By 2020, the expected revenue evaporated faster than a magician's rabbit, leaving the city in a tight spot. Fast forward to 2024, and Harrisburg is still grappling with its financial woes. According to Data USA, 28.3% of the population for whom poverty status is determined in Harrisburg live below the poverty line, a number that is higher than the national average of 12.5%. Number 2, Olympia, Washington. Olympia, Washington serves as the state capital, but its identity is deeply rooted in its small-town atmosphere and stunning natural beauty. Home to just 55,000 residents, it offers a stark contrast to the energetic urban landscape of nearby Seattle, which vaunts a population of approximately 755,000. But why is this capital city so empty? Much like Seattle, it's fair to say that the weather may put many people off of the idea of living here. On average, Olympia has 50.85 inches of rain per year. While that sounds like a lot, because, let's face it, it is, you may be bewildered to learn that New Orleans has 62.7 inches per year, and sunny Miami has 61.9 inches per year. So there must be more reasons why people don't live in Olympia other than a little rain. The first thing to note is that the poverty rate in Olympia is 14.8%, significantly above the national average. Much of this can be attributed to pricey housing costs. In 2022, it was reported that 30% of households in Olympia were housing cost burdened, or spending more than 30% of their income on housing, namely rent or mortgage and utilities. Half of this number were severely cost burdened, or spending more than 50% of their income on housing. There's also ample evidence stating that Olympia is suffering from a growing rate of disconnected youth. From 2.1% disconnected youth reported in 2014, the numbers went up to 9.8% in 2019. City Council member Amy Buckler spoke about the matter, saying, "What this means is 16 to 19-year-olds who are not in school, not high school graduates, and not in the labor force. We know many youths are struggling with a lack of hope, support, or a lack of resources and guidance." Number 1, Carson City, Nevada. Carson City, the charming little capital of Nevada that often finds itself overshadowed by the bright lights and bustling crowds of its flashier neighbors, Reno and Las Vegas. With a population of about 58,000, it's a quaint town that feels almost like a cozy nook in the vast expanse of the Silver State. Despite being the political heart of Nevada, Carson City remains relatively small compared to its extensive land area, giving it an intimate vibe that can feel a bit underutilized. As of November 2024, Carson City is grappling with a noticeable unemployment problem, reflected in an unemployment rate of 4.8%. This figure indicates that out of the labor force of 26,210 people, 1,255 individuals are currently unemployed. With rising unemployment numbers coupled with a shrinking workforce, Carson City faces the dual challenge of not only creating more job opportunities to accommodate an increasing number of unemployed residents, but also re-engaging those who may have withdrawn from the labor market. Additionally, while Nevada is generally considered more affordable compared to states like California, Carson City still faces challenges with the cost of living, particularly in housing. The housing market has seen significant price increases, leading to affordable housing shortages, making it harder for young professionals, families, and low-income residents to find suitable housing. Rent increases have also concerned many residents too. Like many places in the western U.S., rents in Carson City have been rising, putting pressure on lower-income residents. Lastly, with many struggling to find work, the poverty rate is not looking good. According to Data USA, 11.2% of the population for whom poverty status is determined in Carson City live below the poverty line. What about the 10 cities Americans don't want to move to anymore?